What's up, everyone? Today, I wanted to talk about the most important thing in trading, and that is risk management. Now, what is risk management? Risk management is knowing how much you are willing to put into a trade that you'd be comfortable losing if it goes against you. So there's a lot of different strategies for risk management. One is a stop loss. If the stock hits this level, if my price hits this level, if I lose this much, I'm out. It's like a hard stop loss, right? I don't really use stop losses a whole lot because pretty much when I go into a trade, I'm holding it until I either lose it all or make what I want to make. And that works out for me personally because I have a higher risk level. With me in the Army, I don't really have any expenses, so I can afford to risk a lot. Now, you need to know your own financial situation. You need to understand how much money you have in your account. If you have $10,000 in your account and that's all that you have, and you have your rent money, you have everything in there, one, that's probably not a smart idea, and two, you definitely should not be risking it that much. Now, how do we control our risk? If we want to be more risky, but we don't want to lose all of our money in one trade, what can we do? And there's a few different solutions to this. So what I personally do is I do something called dollar cost averaging. So that means I'll enter, let's say I want to put $500 per trade or $1,000 per trade. Let's do 1,000. So I want to do $1,000 per trade. That's the level of risk that I'm willing to take per trade. So maybe I'll enter starting with $200 or $300. Then if the trade starts to go against me, I'll look and I'll see where I think it's going to reverse and start to go with me. Then once it starts to go with me, I add more, and then my average cost is now lower. That means when it starts going with me again, it only has to go a little bit, and it's multiplying my returns because I have more equity now in it. Now, this is a bad idea for some people who don't understand when to either stop adding or when to know if it's going to start going your way, or if it's just a done deal and you just need to get out. Now, what I do is I'll play reversals. So if let's say I'm in an Apple call and my average cost is 50 cents per contract, right? I have 10 contracts. If I add 5 more contracts at like 25 cents, my average will now be lower. It'll be like 30 or something. I don't know. I'm not great at math, but it'll be lower than 50 cents. So then now when the option contract moves from 25 cents all the way back to 35 cents, I'm now positive, even though my starting was only 50 cents. So now at 35 cents, I'm positive because my average cost is now 30 cents because I added a lot more shares. Or not more shares, I added more contracts. And then we also have to understand how to get out of it. I've been hearing a lot of issues of people getting out too early or not getting out, getting greedy. But how do we know when to get out? And what I like to do, which is good for beginners, is set a percentage of what you're looking to return on whatever play you're in and then start scaling out. So if I'm in a Apple call and all my contracts are up maybe like 5% and it's still going with me pretty well, maybe I'll start to look to trim at around 10, 15, 20%. I'll trim some of my contracts, secure some profit, so if it goes against me, I can get out at break even. And then what I'll do is if it starts to go with me even more, so I'm up 25, 30%, I'll trim even more contracts, or I'll trim them all, and we won't have any contracts left, and we'll be out of that trade at a big profit. So you got to understand percentage-wise and not dollar-wise. It's hard to watch a lot of your money moving up and down, but what you got to understand is if you had one contract, you might only be down $2 on that contract. But if you have 100 contracts, 500 contracts, it's going to look like you're down way more. But you got to understand, you do go into drawdown before you go into profit. So understand that, use that to your advantage, and make sure that you understand risk. There's a saying, and it basically says that we're not expert traders, we are expert risk managers. It's very true because we're not going to win every trade, and if we lose one trade and we lose all of our profit because of that, we're not a good trader. You can have a 95% success rate and lose it all because of one trade. and that makes us not a good trader. Anyways, that's all I have on risk management. If you guys have any more questions or you want to know more, just hop into my Discord. I post all of my trades live, and I respond to pretty much every single one of you when you guys have questions, and I'm down to teach any of you guys whenever you want. As always, just please leave a like and subscribe for me helping you out for free. I hope you guys have a great trading journey. Good luck, and remember, risk management is everything.